Here's today's Money Metals Minute, brought to you by MoneyMetals.com. Markets were relatively quiet yesterday in advance of today's FOMC meeting. Gold and silver ended almost unchanged. Stock prices were also flat. Fed Reserve bankers aren't the only ones gathering this week. Officials from the Bank of Japan met overnight. Despite prior efforts to weaken the yen and generate price inflation, the Japanese currency has been strengthening relative to the dollar. That dynamic also lent support to gold and silver prices. Here's a special report now from Mike Gleason of Money Metals Exchange.
It is my privilege now to welcome Michael Rivero, founder and editor of WhatReallyHappened.com. Michael hosts a daily radio show and covers geopolitics, financial markets, and many other topics like few others can, and it's always great to have him on. I saw a great cartoon the other day, and I believe you've seen it too, where it's an illustration of the never-ending circle where the Fed threatens to hike rates and the markets tank. Then they talk or decide to delay the hike, the markets recover, and then they threaten to hike again, and the markets tank again, and around and around we go. The cycle just keeps repeating. It's basically gotten out of control, how the rhetoric is the driver in the markets.
Well, that's by intention because, again, going back to Bill Clinton's term in office, they established the President's Special Working Group on the Markets, which is colloquially known as the Plunge Protection Team, who went in and basically manipulated the stock market to keep those numbers high so that they could be used as a political banner. Now, if you or I were doing what the Plunge Protection Team is doing, they would all be in jail. And so Bill Clinton's whole argument, and every president since then, is the economy's doing great. Look at how high the stock market is. And, of course, anybody who's on the inside of the Fed who knows when these decisions for rate hikes are coming, they're in a position to profit immensely, either by going long or short selling just ahead of these announcements. Now, the Federal Reserve is in a little bit of a corner because the larger agenda is to try and draw the world back to using the U.S. dollar for global trade and banking, the Bretton Woods deal that they hammered out at the end of World War II. But more and more countries are turning away from the dollar. They're turning toward the ruble and the yuan. And so the Federal Reserve is now stuck. If they raise rates to make the dollar attractive internationally, they risk crashing the stock market and the U.S. economy. If they keep the rates low so that Wall Street can go on rigging the market and making it look good as a political banner, then that accelerates the decline of demand of the dollar internationally. So they've gotten themselves into a real corner here, and I don't think there's any way they can get out.
We have had a bit of a correction in the metals here over the last month or so, which you would expect after the fantastic start to the year for gold and silver. But they've been quite resistant, and to this point, the correction has been rather shallow, and the metals are still holding above some key resistance levels. So they haven't been able to slam it like they have been in years past. Do you think there's something there, and might this be the dawning of a new era and possibly the beginning of the end to the success of the manipulators? Any thoughts there?
Yeah, I think we're starting to see that, and of course they're going to fight this thing down, to the bitter end. We know that the London gold fix is still playing this game of blending the physical prices with the paper contracts and then declaring that's the price of gold. But people are definitely turning away from their paper contracts. There have been huge scandals involving gold coming out of the U.S., or gold that should be there and isn't even there. A couple of years ago, I did a couple of episodes of History Channel's America's Book of Secrets, and one of the most important episodes we did was called The Gold Conspiracy. And we were talking about how all of these countries that have put their gold bullion for safekeeping in the New York Federal Reserve are now having trouble getting it back. And we were talking about how Germany discovered gold bars that bore the hallmarks both of the New York Federal Reserve and Fort Knox, and discovered they had tungsten cores. So somebody's been playing fast and loose with other people's gold, and it's making people very, very nervous. Now, in terms of the German situation, their private central bank is more loyal to the private central bank system than it is to the people of Germany where they operate. And as a result, lobbied the German government to stop asking for their physical gold back, saying, we know it's there, there's a paper record. But it's becoming more and more obvious that the New York Federal Reserve, J.P. Morgan, the Bank of France, the Bank of England have been accepting gold for safe deposit and then leasing it or selling it out the back door for other profitable operations, and now they can't get it back. And so they're stuck as well. And we're going to see a gold run at some point. where everybody's going to come on in and say, I want the physical delivery now. Up until recently, these issuers of the paper contracts have encouraged people to stay with the paper by paying them premiums. In other words, yes, you can have your gold now, but if you'll renew the gold contract, it's going to be the same value, and we'll give you 10 or 15% vigorish to stay with the paper. But at some point, that's going to have to crash when people realize that all of these brokerages have been running the gold paper trade as a fractional reserve system, meaning they have issued far more paper than they have gold to cover it.
That was Michael Rivero and Mike Gleason at moneymetals.com. Live prices at moneymetals.com show gold currently trading at $1,323.40. Silver comes in at $19.50.